We are live, I think. Cool. All right, let me know if you guys can hear me or see me. All right, I'm trying to get fancy over here. I got my camera. No, wait. Oh, look at that. Okay, let me know if you guys can see me or hear me in the chat. It says I'm live. I see 9 people here. All right, everyone, this is a Q&A. And basically ask me any tax questions that you want, and I'll be answering those questions. And let me know in the chat if you guys can hear me. Everything should be working okay. And meanwhile, I didn't realize how messy my desk is. Let me quickly clean that up very quickly. Oh, put it over here so you don't see. All right, cool. Let's do it. Any tax questions? Hey, Bjorn, what's going on? All right, this is a live Q&A. You can ask me any tax questions, and then I'll be answering those. I'll be answering those tax questions that you have. Any tax questions? Anthony, what's going on? Hello, hello. Cool. So this is live Q&A. No, we're good. This is live Q&A. So I'm here to answer any tax questions. I'll be here for another hour. Any questions you have on tax strategy, I'm planning for 2024, or your specific scenario about your business, your entity structure, your taxes, please let me know, and then I'll be answering those questions. All right, we got a first question coming in from Bjorn. Bjorn, good one. Let's go. If I own a U.S. LLC elected as an S corporation and pay myself a salary, but I've recently moved out of the USA. Do I still have to pay SUTA and state payroll taxes? Do I still have to pay FUTA? So you moved out of the USA, permanently moved out of the USA. So you are an S corporation, but you moved out of the States, but your business still operates here and you still pay yourself a salary. Am I understanding that correctly? Please let me know in the chat. Anthony says, how do we determine how much to pay ourselves? No employees, S corporation, married. So if you are, and the question is from Anthony. So Anthony says, hey, I am married and I've got an S corporation. I've got no employees. How do I determine how much to pay myself? Well, first of all, you have to follow the rules of reasonable compensation. Okay. You have to pay yourself a reasonable compensation. What does compensation really mean? Basically, the IRS says, what is somebody else on the market just like you is earning? And this is just a plain term, right? This is just kind of a quick and dirty explanation. But really, let's take an attorney, for example. An attorney in his S corporation is not necessarily doing 100% of legal work. He's also doing marketing. He's also doing administrative. He's also doing paralegal. So you want to take all of these areas that you do in, let's say 10% marketing, 10% paralegal, 10% administrative, and 70% attorney. So take that salary for each person that they would be filling in those roles, how much time you spent on it. That would be a pretty good backup for you to do a reasonable compensation where you're saving on payroll taxes, not paying yourself a really, really high salary, just right. And Anthony, let me know if that was helpful. We got another question from Fully Fathu. If S corp tax election approved for last month or for prior years, say 2023, what all benefits can still be applied for that part year S corp benefit? Date of election, S corp, why not matter? Guys, please write your questions. Don't rush through it. I'm having a hard time understanding what you guys mean. Okay, so your question, if I'm understanding correctly, you were approved to be an S corporation for the mid of year last year. So that means by the IRS language that you were an S corporation for the full year. So any benefits that S corporation would be entitled to as an S corporation would be applicable to you for the full year. Cool. Let me know if you guys have any more questions here. Yeah, pretty hot here. Fully Fathu, let me know if that was helpful. And let me know if you guys have any more questions here. We've got quite a few people joining online. So this is the time where you guys ask questions. By the way, the most person that asks questions is going to get our book. I don't have it here. I'll have somebody bring it in my office. But outside, thinking outside the tax box will actually mail you the book. I think on Amazon it's like 21 bucks, but it's yours to keep. So let me know if you guys have any questions. Oh, there's the book. I knew you heard me. Perfect. Thank you so much. All right, guys, you get this book mailed to you for free. Okay. The person who asked the most questions is going to get this book. Okay, cool. So say does say date of an S corp election approved was 12/27/2023 by IRS. How the tax return filing changed before 12/23 and after 12/27? Yeah, for 2023 you'd be an S corp the full year. The IRS letter would approve you and say you can file S corporation for the full year. So the letter of the IRS will say you are approved as an S corp status as of 12/27/2023. The reason the letter would say that is most likely that's when you incorporated and then you file for the S election. I'm not really sure what your accountant did, but the point is you can file based on the information that you're giving me here. You can file as an S corporation return for the full year. There is no like before and after, unless you were not an entity before. So, for example, let's say you were a sole proprietor. You became a business entity and a single member LLC, for example, in July and elected an S corp status in December. You would be an S corp from July when you became an entity. But if you were a legal entity, such as a corporation or an LLC for the full year, and now you were granted an S corporation status, then you're an S corporation status for that full year. I hope that makes sense. Ronald Batu Sale says, is gin and ammo a deduction for security purposes? Gun and ammo, I'm guessing. If it's for the purposes of the store and it's ordinary and necessary expense for your business, for the type of business that you have, maybe for in the area that you are, then the answer would be yes. Anthony says, can my wife get reasonable compensation also, or just myself? Anthony, if your wife is a business owner just like you are, then she gets paid reasonable compensation according to the IRS standards. Now, if she's not an owner, but she works for the business, you still want to pay her the salary that you would pay somebody else doing her job. Like, let's say, for example, she's helping you with some admin work. Well, how much would you pay the admin? That would be something to consider. All right, thank you guys, everybody who's asking questions. The person who asks the most questions gets this book, Thinking Outside of Tax Box, for free. Okay, so let's get those questions going. Okay, I've got a state-specific question from B. Jorn. S corporation normally have to pay state taxes, state and federal unemployment. That is correct, right? Which is FUTA and SUI. If I moved out of the New York state, this means my company no longer needs to pay unemployment insurance. As far as I know, B. Jordan, yes. I'm not 100% on this. I'm telling this to you because I have one employee that is outside of New York State in another state. She's a W-2 employee. I don't pay any state unemployment insurance taxes for her, for the state of New York. Got a minister, Rafael. I had a business entity, SS4, in November 2021. Is it too late to elect for S Corp for this tax season of January 2021? Well, that's a tricky question. So Rafael is asking, I had a business and I had an SS4. For those of you that don't know what SS4 is, basically it's a letter from the IRS. Well, not a letter from the IRS, it's a form. And the letter from IRS, right, basically confirms your EIN number. So he basically says, I have the EIN number for 2021. Can I go back and elect to be an S corporation in 2021? It's a tricky question. If you haven't filed your taxes for those years, yes, you can. But before you do that, before you go back and do it, you would have to do, number one, late election, and number two, did you pay yourself a W-2 salary? Did you do everything that was necessary to do as an S corporation owner, and you just didn't file taxes and didn't pay yourself a salary? Then it will be a tricky situation. But can you go back to 2023 and be an S corp, make an S corp election? The answer is yes. But again, were you paying yourself a salary? That would be a question here. Anthony says, in please explain PTET and can we use that here? All right, Anthony, first of all, hello, and I'm going to be flying to Texas, I think, in about a month. How many of you on the call know Dan Kennedy? Let me know in the chat. Okay, maybe not a lot of you. I'm going to their super conference, which is a marketing conference, which is pretty cool. It's going to be in Texas. So Anthony says, I'm in Texas. Can you explain PTET? So for those of you that don't know what PTET is a pass-through entity election. That means that it's a voluntary tax imposed by your state and then given a credit by your state on your personal taxes. The reason it's done is so that you can receive a business tax deduction for paying business taxes. Now, I'm not going to get into a history of how it came about a few years ago, but most business owners qualify for it, and it's very, very beneficial. Unfortunately, not a lot of accountants use PTET. Anthony over here is from Texas, and he says, Boris, please explain if I qualify for PTET. Unfortunately, Anthony, the answer is no. If you're in Texas, because Texas has no state taxation, it does not have PTET. All right, I got a question from Foley, by the way, who's probably winning right now to get this because he's asking the most questions. How can we do captive health insurance ourselves in a company of two spouses so we can keep health insurance premiums we pay and not waste thousands of dollars every year in insurance premiums? Foley, can you explain what you mean by that question? Because I'd love to answer this. Because there's a really good strategy on using health insurance for S corporation owners. I actually have a couple of videos on that on my YouTube channel. Next one, B. Jordan says, if I'm not a New York State resident and I expect a zero bill from New York State, can I still elect to pay PTET just to reduce my federal taxes and get the refund when I file a state and non-resident return? So, B. Jordan, because your business is in the state of sorry about that. I had a notification pop up. Let me just pause my notification. B. Jordan, because your company is in a state of New York, you would have to file a non-resident New York State return and pay taxes on those earnings in the state. Now, as far as the PTET, how it works for non-residents, I am not 100% sure for the state of New York. I remember reading something about it, and I have to tell you, I don't remember 100% of what it said about non-residents. That is something that we would have to take a look at and check. Minister Rafael, is PTET available for Pennsylvania? Is PTET available for Pennsylvania? Let me ask my team. Give me a second. Because PTET, like many states are and many states no. Let me see. See if I can ask my team for you. Hold on a second. Okay. Hopefully I'll get an answer. You no PTET in Pennsylvania. Okay. Oh yeah, that's right. No PTET. I think Pennsylvania is one of the three or four states that does not have a PTET. Sorry, Rafael. We got another question. Single member LLC here. I have 3 kids. What's the best strategy to pay them? And do they need to pay taxes ages 15, 13, 11? All clean cars for me. Wow, I love that. So for those of you that are thinking of your kids, the best way to hire your children in your business, okay, is through a single member LLC, which for tax purposes considered a disregarded entity as sole proprietorship. So we've got Rowan, what is it? Ronald B. Auto Sales. What's your first name? Let me know your first name in the chat. Says, I have a single member LLC here, so I'm guessing you're not an S corporation. What's the best strategy to pay them? I actually have a video on hiring your children. So go ahead and watch that. What you need to do, you don't even need a management company. Whatever you pay them from your single member LLC, up to $14,600 is exempt from federal income taxation. That means you can pay them up to $14,600 in the year 2024, and they will not pay any income taxes on it on the federal level. At the same time, they will not pay any Social Security and Medicare tax. So if you've got 3 kids, if we do a quick and dirty math calculation here. Let's do that. Quick and dirty math calculation here. So we've got 14,600 times 3, $43,800 will be your tax deduction. And assuming you're in the lowest tax bracket, even 20%, that's going to put $8,700 in your pocket. I love that. All right. Auto sales. You got to tell me what your first name is. Okay, I got another question. Healthy family paying $30,000 on premiums. Do not get much out of it otherwise. I feel you. I'm in this. Listen, don't even get me started. Don't even get me started on those health insurance premiums. Okay. All right. Instead, if we could keep insurance premiums in a captive insurance company of a sort, at least if it's somewhere we could use. Oh, now you're talking about the captive insurance company. I don't know much about your business, but captive insurance is a completely different animal. You should not be using it just for your health insurance, especially $1,000 in premiums. Captive insurance says they're set up and they're maintained. The cost of that alone will probably be anywhere between $90,000 to $100,000 for you just to maintain that. So it's not as simple as just, hey, put our insurances there. Warren says, what are some methods used to determine quarterly taxes for small businesses? So Warren, one of the things that we do for our clients when we do quarterly estimate taxes is that first of all, we take a look at the net profit of the business, right? After deductions for that quarter. Then how much was the owner's salary up until that point? And how much taxes did the owner already pay, whether in the estimates or on the payroll taxes, federal income tax on their payroll. Then we calculate the tax rate minus what was paid, and that is the balance due. Now, that's what we do in our company. Some accountants and some business owners actually say, you know what, I'll pay whatever my liability was last year. And they do that. They take, let's say, last year's $100,000 liability and maybe divide it by 4 quarters, whatever that may be. But we try to stay as close as possible to an actual figures. All right. By the way, whoever participates the most gets this beautiful book right here, the tax book. Now, before we continue with the questions, guys, before we continue with any other questions, guys, I want to check something out on the screen over here. Hold on a second. Yeah, I'm trying to get fancy. Hold on a second. See if that's going to work. I am not sure. Yes, it might work. Okay. Cool. So I had questions here. Oh, shoot. Cool. By the way, guys, whoever is going to ask questions, the winner will get the tax book. I think Mariana, my wife, is keeping track of whoever participates the most. So, okay. Yes. Okay. Looks like we are live. Yeah. Cool. All right. Cool. Now I see myself on a bigger screen. That is pretty cool. Now looks like my hair is all messed up. Right? It's better. I don't know. It looks like a mirror. Okay. Perfect. All right. We got some questions here. Let's see. Oh, so the auto sales guy said his name is Justin LB. Ron LB Auto Sales. Got it. Sounds like LB. Justin, didn't we speak on the phone? Let me know in the chat. Okay, so Anthony says, besides children, because we have no children, would any other family members qualify? Yes, you could have parents work for you, but I don't know what your parents' tax situation is, what tax bracket and what's not, right? So you really need to speak to your tax strategist to kind of do that. Let's see. Curtis says, is there any other way to pay tax on an S corporation LLC besides through an owner's draw? Curtis, my friend, you don't pay taxes through an owner's draw for an S corporation or an LLC. You pay taxes on your entire net profit in the business. Okay. And then whatever you draw from the business, whatever distributions you take are actually tax free because you already pay taxes on the net profit of the business. Okay. B. Jordan says, can I give family members ownership units of my LLC, which is an S election, to shift income to my grandparents in a lower tax bracket, even if they do zero work for a business? B. Jordan, that is a very specific question. I'm afraid to answer this question on a live call because my answer can be taken out of context. So please, I would recommend you strategize on that with your tax advisor. Iron, I'm an S corp. If I pay my 17-year-old, do I have to pay her with a W-2 or with a 1099? If you're an S corporation, Iron, you would pay them with a W-2. Now, what I would recommend is speaking to your tax advisor about setting up a family management company. Okay. And that will help you avoid payroll taxes legally. Legally. Okay. All right. Fully Fathu. Now, Fully Fathu, is that your real name? Let me know in the chat. Okay. Took Corona 401k loan, not default on it cause distributions. Anyway, to avoid for reduced taxes, as income will be higher this year from that 2020 Corona disaster loan distribution. So anybody that doesn't understand this question, Fully basically took out a loan from his 401k. He defaulted on the loan, and now the loan is being converted to income as a distribution, as an early distribution from the 401k. He says, "Is there any way I can reduce that?" Unfortunately, the answer is no, unless you've got a business, which I'm assuming you do because you are on this call, and you can start using tax planning strategies to take deduction from your business. Okay. Next question that I have. I wonder if there's any way I can make this bigger. Hold on a second. It hurts my eyes. Yes. Oh, it's much better. Okay. Cool. I can actually see questions on the screen now. Hold on a second. Make it even bigger, baby. Hold on. Hold on. Yes. Cool. Oh, well, now I just screwed it up. Hold on. Nope. I see it. Okay. Next question, Rafael says, I will be filing for the first year time with my SS4. Okay. Now, when you say SS4, you got to clarify for yourself. What do you mean by that? Um, SS4, what entity are you? SS4 doesn't mean anything. SS4 is basically a paper that says you applied for EIN and you have an EIN. Now, it is a private trust unregistered. Okay, now you clarified it. Sorry. I would like to remain private. Will electing to an S corp change my status to public? If you are a private trust, then you can't make an S corp election. At least you know the S corp election is made on a LLC or a C corporation, not on the trust. All right. B Jorn says, let's see. B Jordan says, is S corp a viable strategy for a consultant, not a business owner? The sole member does all the work and all income is sourced from the said member. It depends. Anybody can use an S corporation. It can be a big business owner, a consultant, and freelancer. The question really becomes where are their gross revenues and net profits to strategize properly. Justin says yes. I'm guessing Justin LB says we spoke together before. Okay, Justin. Well, whatever the outcome of that conversation was, I just want to say I'm happy that we're speaking again here. Can I zoom in on this thing? Guys, want to see something really cool? Check this out. Whoa. Look at this technology, right? Okay. Gift tax. Do you have to file a gift tax if you gift your child $25,000? What's the gift tax exclusion, guys? Isn't that 16 or 17,000? I don't remember the last time I looked at it. I think it's like 16 or $17,000. So if you are gifting your child, you and your wife can double that, give them a gift and not file any gift tax return. But if you're going to give them more than an exclusion amount, then you would have to file a gift tax return. The giver, the donor, files the gift tax return. Anthony said, recommend a solo 401k or an IRA. Generally, I would go with a solo 401k, depending on the business structure that you have. Solo 401k beats the regular IRA by a lot because the regular IRA you can put away $7,000, and the solo 401k you can put like 23,000 plus 25% of your salary if you're an S corp. And also, solo 401k beats the SEP IRA as well. Okay, I hope I didn't miss any questions here. Do we have any more questions, guys? Can we have Roth contribution, defined contribution plus, or something similar, which is on or after Roth basis and not just tax? Roth. So fully Falto is asking, can we have Roth contribution in defined contribution plans? I see, or something similar, which is after tax. So What Fully is asking is actually a really, really good question. I want everybody to pay attention over here. You can have a regular 401k plan. Okay, when you have a regular 401k plan, you also I take a step back. I take a step back. Excuse me. When you have a regular 401k, all the money that you put in this 401k generally are tax deductible, right? It's a traditional IRA. It's a traditional 401k. The money is tax deductible. You can structure your 401k to also have a Roth component to it, because Roth contributions go there after tax. So they're not tax deductible. But all the earnings in that account under Roth are tax free to you. So Fully is asking, can you have Roth contribution in a defined contribution plan? The answer is yes, but you've got to speak to those financial advisors and what are they called? The TPAs that prepare all the paperwork and to structure it that way for you. Okay, this was a great Q&A call. Mariana, are we getting down on a winner? Bjorn, you asking questions on so many different businesses. I'm wondering, how many businesses do you have? Because before you were outside of New York State, now you're inside of the New York State. Jay says, if I'm a highly compensated individual and also have a side gig, okay, I don't think you finished the sentence. What's the best strategy for retirement? So, Jay, if you're a highly compensated individual, which is totally fine, the question is, do you manage your 401k at your job? If you don't, you can, because the maximum contribution per individual. So, if I'm not mistaken, for 2024, don't quote me on this. I think it's 61 or $63,000. I'm not 100% on this. So as long as your total contributions into your retirement accounts from different jobs and gigs and all of that doesn't exceed that, generally you would be 100% fine. Okay, let's see. Anthony says, please explain buying $1,000 car for a write-off, but you recommended not to buy one just to get a write-off. That's correct. Anthony's a good student. He's been watching my YouTube channel. That is correct, Anthony. So do not buy a vehicle to get a tax write-off if you're just doing it for the strategy of a write-off, right? Just to get a write-off. No, buy it if you need it. Now, the bonus depreciation rules are, it was 100% you could depreciate the vehicle over 6,000 pounds in 2022. In 2023, that's 80%. In 2024, that's 60%. So any vehicle that you buy right now. Now, mind you, that there's actually currently a law that hasn't been signed by the Senate yet. It has been signed by the House, which would allow and bring back the 100% depreciation rule. But we're still waiting on those developments. Next question. Wait, please, I'm buying. I did that. Fully says, there's a gift to your children below gift limits for the year, say 7% raises kids' taxable annual income. Kids get paid from the sole proprietor up to standard deduction. So Fully, I'm not really understanding your question. Are you talking about the gift, or are you talking about paying children? Gift and paying children, two different things. When you gift your children under the annual exclusion of 17,000, it is not a taxable income to them, nor is it a write-off to you. Paying kids, on the other hand, from a sole proprietor up to the standard deduction of $14,600 is a write-off to you and still not an income to them on the federal level because it is under those limits. Warren says, what strategy is best for auto deduction? The bonus depreciation, really. But again, our bonus depreciation is being phased out. Nastro, but I did not get the book Thinking Outside the Tax Box. When did you order? And if you didn't order, and if you're a winner from the line, you probably didn't email us your address. We're going to share that email in a bit. Jay says, everyone online pushes 401k, employer match, and Roth 401k. However, if I have 401k and Roth 401k, is putting 7,000 into the Roth 401k basically the same thing if I don't want to push into Roth IRA? Okay, Jay, let's take it one step at a time. Everyone online pushes 401k match. Okay. And Roth IRA. Okay. However, if I have a 401k and a Roth 401k, is putting 7,000 to Roth 401k basically the same thing if I don't want to push into Roth IRA? If you've got a 401k that has a Roth component to it, You can still do a Roth IRA of $7,000. You don't have to do it if you don't want to. And also, you have to take account of income limits. You might have to do a backdoor Roth IRA conversion. Okay, Raphael says, I will get the whole life insurance by the end of this month for my again, he says SS4. Raphael, we already established. I would like to strategize with a tax advisor to implement the plan that can work together. Do I start with a tax advisor or insurance? I probably would want to start with a tax advisor to figure out that SS4. Anthony says, what's your opinion on infinite banking? I have no opinion on insurance banking on the live Q&A. Let's continue. Nastro, I did email my address. Would be happy to do so again. What email should I send it to? Mariana, can you put the email in the chat for Nastro? Fully. Gifted kids 20,000 example versus 17,000 a year. Does the kid have to pay income tax in the example on 3,000? No. You would have, if you're not married fully, and you would have to file a gift tax return and claim $3,000 against your exclusion. Our exclusion right now for gifts and estate tax. What is it? $11.8 million. Don't quote me on those numbers, but I think that's what it is. Iron, what's the age of the child if you pay to work for S corp? I mean, the age of the child really depends, right? Generally speaking, a child over the age of 10 can really do a lot of basic work in the office, right? Or in a business, like somebody was saying over here that they help them wash cars. It's an auto sales business or something of that sort. Some business owners, children who are like 5 and 6 year olds to run marketing campaigns, and they're on their marketing campaigns. So it really depends. Dan says, can I put my child's Medicare insurance on my 2% S corp shareholder B2 as a wage in addition to mine? The answer is correct. Yes, generally should be able to. The insurance is in the child's name. If the child, well, how old is the child? The insurance can't really be in the child's name. So if the child is over the age of 18, I'm not sure. So that's the question. Joseph says, can more than 2% shareholder reimburse 1 year old? Yeah, Dan, a 1 year old child, the insurance should be under your name or on the spouse's name. In both cases, if you're paying for it, it can go on yours. That's fine. Joseph says, can more than 2% shareholder reimburse health insurance premiums for his and his family, even if the policy is not sponsored by the company? That is correct. The law of the insurance says this particular law says that the insurance can be on your name or on the business name. Has a few other employees. What if was purchased through an ACA exchange? Yeah, that it must be purchased through a marketplace. Well, it must not be, but it's through the marketplace. That's totally fine. Okay, guys, we're going to call it a day today. We're going to try to do this on a weekly basis. I know I promised it before, but I'm really working on myself and my schedule to do live Q&As. If not once a week, at least once every 2 weeks. So you're more than welcome to join. Mariana, can we pick a winner for the outside the tax box? And we're going to share our email, and I'm going to put it in the chat below. Please email us your address. Yep. Please email us your address and say you're the winner. Mariana, can we have the winner? Can you put in the chat who's the winner? Mariana, we're waiting for the winner. Yes, Minister Raphael. Wow, Minister Raphael, you want a book. And Justin LB. Mariana, I said we're going to give out one book. All right, we're going to give out 2 books. No problem. Minister Raphael and Justin LB. Fully says, not sure if there's no advertisement in live sessions. Missing your answers due to advertisements. Ooh, I'm so sorry. I don't know how that happened. Awesome answers. Thank you. By the way, guys, for those of you that are interested, we have membership in YouTube where basically it's like $2.99 a month. It would really support me and my channel and to continue putting out a lot of content. And very soon we're going to be releasing another membership level where I'm able to answer your live questions on YouTube channel. So that's still to come. But for those of you that want to support my channel and myself, when you go to my YouTube channel, there's a button to click join. Please, would really much appreciate it. And for those of you that for live Q&A, thank you so much.